Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. Well, we saw the S&P futures trade as high as 67.50. Major sell divergences off the 30 and 60-minute time frames, and then we saw the S&P futures drop over 100 points. We saw the Nasdaq drop off the highs, 25,000, roughly about 25,000 and change, 25,100 and change, and dropped all the way down about 400 points. I don't like the market. I've been telling you. I think the market already has got these interest rate cuts priced in already, and I tell you, I think these gaps are going to get filled. I don't even think we're going to get a Santa Claus rally. We could just go straight down, but I'll save that for the second segment here today. We saw gold absolutely exploding here today, up another 3%. We saw big sell reversals on the 15-minute time frames on the spiders and Qs. Once those 15-minute time frames reversed to sell, I knew that there was an 85% chance that the highs were in. Then we got the sells on the 30-minute, and when the 15 reversed to sell on the spiders, and the 15 reversed to sell on the IWMs. The Russell, the worst of the day, down 2.43%. When the 15-minute time frame on the SPY reversed to sell, it correlated with its 60. You went into a sell disconnect. The Russell, great patterns on the Russell. I'm going to show you the Russell. Also, the Qs, when the Qs reversed sell on the 15, I knew that there was an 85% chance that the highs were in. And then around 2:30, the 30-minute time frames reversed. Got a really great pattern off the 5-minute. S&Ps dropped 40. So let's get right to it. We saw big sells here today. Off 1:30 was the perfect time frame. MSTR, Coinbase, Spiders, Qs. What else? Microsoft. We had AMD. The whole world was a short at 1:30. But let me just get right to it here, and I'm going to show you the patterns for the day. So first of all, looking at the 30-minute time frame and the 60-minute time frame on the S&P futures. First of all, going back to when the market right here, you can see right here that first of all, if you draw your horizontal line right here, you can see that the MACDs, that's not really a really good parallel line. If you see here, you can see that the MACDs, okay, did not confirm the highs here. Okay, that's number one on the 30 and the 60-minute time frame. And then when you got the push up on the new high, the MACDs did not, right here, the MACDs are negative. So the price pushed up into a negative MACD, and this is really a very, very big sign here that I would not want to be long. I'd be looking for shorts. That's exactly what we did. We called the short 48.5 up to 54.5, and you blink, the S&Ps dropped 21. Again, so this is two sell divergences. The new high, the MACDs did not confirm on the 60 and on the 30, and then when the price pushed up into the negative MACD, it was a double sell divergence. Also, looking here, you can see the spiders on the 30 and 60. When we got this first push down, the S&Ps were trading on around the 54 level, 66.54. I knew the market was going to rally, and we did. We rallied close to about 50 points on the S&P, actually 48. The MACDs did not confirm the low right here. All right, you can see the MACDs did not confirm the low. That was yesterday. And you can see here today, that was yesterday. And you can see the same pattern here today. They bounced here. The 60-minute time frames did not confirm. You can see the 60s already in sell mode from yesterday. And then when we got this push down, we got a really big rally, and that was a monster long. Right here was the 30-minute time frame. You can see the push up. Again, making new lows. The MACDs did not confirm on the 30 and 60, and then we got the rally up. And then we got some really great shorts. So when you see the 30-minute time frame reversing to sell, well, first of all, when the 15 reversed to sell right here, you can see that the 15s correlated with the 60. This bear flag, look at this, 130. The S&P futures were trading above the 67 I believe the high was 67.04. I said, look out below when these 15-minute time frames roll over. You ain't kidding. Look at Palantir, PLTR, everything lined up. What a bear flag. 180, absolutely caboose, down 4. Coinbase, look at Coinbase, everything lined up. Right here, Coinbase. Here's one short, here's two short off the 15s right there. Look at MSTR here. You can see MSTR. Look at this bear flag, beautiful. Again, beautiful shorts. ADXs are rising on the 60. ADXs are rising on the 30-minute time frame. Look at the ADXs rising on the 30. When you have the ADXs rising on the 30-minute time frame like that, and you get that overbought condition, big selling pressure, you got nothing except one way to go, and that's down. Look at this, 93, kabooshed, almost down 9 points. So these patterns are very, very, very powerful. Very powerful when the ADXs rally like that, okay, on the 30 and 60 and the 15s get overbought. Let them have them. Let them have them. Let's see here. NVIDIA. Let's see here. Avago. What happened here? All right. So let me show you NVIDIA today. NVDA. Really pushed up here. You can see the 60-minute time frames pushing up here. And one of the things I want to show you, all right, is that when NVIDIA reversed the sell on the 15, okay, this again is another bear flag. The 15s reversed the sell. It correlated with the 30-minute and the 60-minute time frame. Really great pattern for the shorts. And then, as you can see here, this is the bounce on the 15, 181.61, dropped about $1.40. A really great short there. Let's look at Avago, AVGO. AVGO reversed after being pushing up to new highs here. You can see about the 363 level. When Avago reversed the sell, down $9 lower, the 15s reversed the sell, and you can see that once that happened, there was an 85% chance that the highs were in for the day. And when you look at the 30-minute time frame, reversing the sell on the 30. The 30 looks like it did. Mine reversed, but let me just see. And then what you do, you short the first bounce. So this has got to be fixed. But the 30s did reverse the sell. I'll have to refresh it. And then you got the short here at 55. Again, everything lined up at this 130, 55, 65. Look at a drop of about $6. So, and then if you look at the SQQQs, which is the inverse, all right, this is the pullback on the 15-minute time frame. All right, so if you look at 130, 14.94, boom, up 50 cents. If you look at the Qs on this happen right here, here's the bear flag, 603.21. Look at the drop here of almost $7 on the Qs. These are great, great, great patterns here. The real great patterns of the day, the IWMs. If you look at the 30-minute time frame when it pushed up here, where's it going? Negative MACD, 350, was it 251? It never looked back. Look at this drop, almost $6 here, 251 and change. And then when the 15-minute time frame reversed the sell right around the 11:45, it correlated with the 30 and the 60-minute time frame. And what do you look to do? You short the first bounce on the 15, 247.90. Never look back. This is an absolute Picasso, absolute Picasso. So MSTR, IWMs, really great patterns here. But let me show you another great pattern. So when you get what's called a double red short, it means that the 5-minute time frame reverses the sell, and it correlates with the 15, the 30, and the 60. So all three time frames on the bigger time frames were in sell mode. When the 5-minute reversed to sell, it correlated with the 15, 30, and 60. The strategy is, look at this. You short the first bounce on the 5-minute right here, 245 and change, and look at the drop right there, $1.40. MSTR, another one, double red short. Here it is again, same pattern. At this time, you have the 30-minute ADX is rising. The 5 reverses the sell. You look to short the first bounce on the 5 at 3 o'clock. 287 and change, and then absolutely cabooshed about $5. What else? Let's see here. What was the other one? Was MSTR we did. Let's look at HIMS, HMS. I told everybody HIMS when the 30-minute reversed to sell on HIMS, it correlated with the 60-minute time frame, and you can see the 15. You short this. Look at this. Everything lined up at 130. HIMS. Look at this beautiful short. 60 and a half. Look at this drop. Okay, $2 on HIMS. These are great, great, great patterns, everybody. And, for me, I will tell you emphatically that when you see these type of patterns, these patterns repeat themselves every day. And this is what I teach throughout the live stream every single day. Let's see here. Meta was weak today. AMD. Overall, it was a real negative day. I think again everybody's expecting that the market with interest rates being cut, but there was supposed to be a release of this retail sales, but because of the government shutdown, retail sales did not come out, nor will the PPI number come out. And last week we were supposed to have the employment number, and that still didn't come out. All right. So I wanted to show you some really great patterns here, again, we're here to trade. We want volatility. We want people to be able, whether you're to be in the positive every day, learning these strategies and being able to be on the right side of the market, to be consistent. And this is what I teach during my live stream every single day from 9 to 4. All right. When I get back, I will tell you what I expect for tomorrow. All right, so since tomorrow the PPI number is not going to be released, I think you're going to see again more volatility here. And I'm sorry for by the way, I'm sorry for the podcast to be late tonight. It's because there were some technical difficulties. I think I got it fixed finally. But overall, I want to say that what is the most important thing for tomorrow is I think we're going to get a push up here. Any rallies, the negative MACDs on the 30 and 60-minute time frame should run into a brick wall. So I'm looking for any overbought conditions for rallies to be sold into, and we'll see what happens. If we do get a push down tomorrow and we gap down and we get to a really deep oversold condition, these MACDs on the 60-minute time frame still may not make that new low. So we may get some cushion here. And then a rally, but overall, I think if we do go down and we get the deep oversold conditions, I look to buy them for a scalp long. If we do get a gap up tomorrow or trade higher during the day, you wait for the 30 and the 60-minute time frames to get overbought and look to short them into the negative MACDs on the 30 and 60-minute time frame on the underlying ETFs. All right. So that's what I think for tomorrow. And again, being Friday. And it's option expiration, so we'll see with the increased volatility if it happens after 2 o'clock. All right, when I get back, I want to share some insight with you, so stay tuned. All right, one of the things that I feel is really important is when you're trading is to really, really be significantly disciplined. So today I had an example, I'm not going to mention the person's name, a really great short in silver. And it dropped from like 95 down to 83, and it dropped 12 cents, and the range was, probably like 90 up to even or whatever, I forgot it was, but it was in the range of about 5 or 7 cents there, and so basically, it dropped sharply, and I said, be careful here on the short. I would look to cover and lower your stop. So let's say your average price is 92 and it's now 83. You look to cover and you lower your stop to probably like 87 per se. You don't want to keep it at 92 because if it sets off a buy stop, it could tick 92 and you could be buying 98s. So you want to go like a little bit below where your average price is. So you're kind of locking in. So even if there's a little slippage, if you buy 87s, maybe you buy 89s or 90s, but you're still locking in a profit. You never really put a buy stop in at your break even because once it's touched, it's the next print. And if it's running, you may buy it 4, 5, 8 ticks higher. So just be careful with that. So anyway, the person did not cover, the person did not lower his stop, and he blew about 3 or 4 linked evaluations. And he said, yeah, in the Discord, he says, I know. Well, first of all, one of my first podcasts, I think it was the first podcast I ever did, I talked about the 2 words I cannot stand. I know. If you know, then why'd you do it? So, to me, these 2 words are taboo. So I got on him, and I was really trying to mentally tell him this can never happen again. And then what happened? By the end of the day, he made a couple $1,000. I went back in. He made a couple $1,000. I think he made, if I'm not mistaken, I think he made between $1,500 and $1,800 on 5 accounts. And I was very proud of him. And he said he would never make that mistake ever again. So this is a game that you have to be so fine-tuned every single day, and you can't deviate from the rule-based. And that's what I want to share with you tonight. All right? So with that being said, thank you for joining me here tonight on The Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. Also, if you'd like to join my community of traders from all around, please go to my website, sktrading.live. And also, if you'd like to follow me on social media, my official, it's my social media, I'm so tired. My social media is official Stephen Kalayjian on X, Instagram, and TikTok. And also, if you like, and please, I don't DM, so please, those are my officials. Please watch for all my links, my posts, my podcasts, and everything that I put on social. Also, if you like to call me or text me, my cell phone number is 914-500-7484. Sorry for the podcast getting out late tonight. I want to say thank you very much. God bless you, and God bless the United States of America. Good night, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.